guys, I'm glad to have you on board again. Today let's do our usual daily routine. It's going to be boring, yes, of course, but that's also one of the major points of this exercise, is to basically show you how boring that job is, even though we're trying to use those video stuff to make it more actual. But still, that remains a very boring daily routine check that we're going to do once again, and hopefully you'll get used to it, because once again the goal out there is not necessarily to feed you with some strategies or stuff like that, but mostly teaching you this routine so you can use it on your own personal assets and stuff like that. We're also just going to cover the SPX out there because I want consistency over these things, and therefore there are plenty of other markets in which you can apply those techniques. That being said, let's reach right into our context analysis. All right, pretty new transition stuff. That's something I'm going to be needing for some transition stuff, because I've found a way to reintegrate my arrows and stuff like that, but that was the only way I could manage this. So I'm not really the best person doing montage and stuff like that and video editing, but I mean, it's still something I'd like to do at some point. So don't get me wrong, I'm not professional into this stuff. All right, so today's catalysts are all going to be the FOMC all by itself. No big deal regarding this. It's hard to figure out whether or not there are going to be massive changes, even though massive consensus expect absolutely nothing out of this FOMC. I personally think that eventually, if I have nothing else to do, I'll eventually get to look for the press conference, which might eventually be interesting, specifically into the questions section. Because I suspect a lot of journalists will actually ask the Fed about whether or not they're aware of the fact that they might be fueling a very dangerous speculative bubble on top of trying to save the economy. So pretty interesting questions down the road, I guess. But these are questions that are fairly not new. They're actually asked each and every FOMC right now. The answer pretty much still remains the same, which is we cannot comment on asset prices during the FOMCs and stuff like that. This is not our job, even though making their price higher, or at least avoiding their price to pull back, is definitely among their targets. So, I mean, they cannot let asset price go down, but they won't accept saying they're actually pushing up. But that's the world we live in. Other news has been surrounding the dollars, obviously. Still falling off, but yesterday we started retesting euro dollar. I sent you a message right into Discord. Remember, I'm getting a covering over other assets right into Discord, not in here. But dollar is the center of the maze right now, and of course the FOMC today can eventually be a game changer. I don't think it's going to change the overall direction of this thing, because there's still a lot of room ahead in terms of dollars and stuff like that, but we also need to assess the fact that we've gone pretty excessive over the latest few days, and therefore that pace is hardly sustainable much longer. It's just requiring more and more vertical moves day after day, until the day we're not going to find suitable bullishness to sustain these ascending trend lines. So yesterday we've retested a trend line suggesting the momentum starts to lag at some point. I suspect the excessive market might eventually go for some corrections, but don't get me wrong, corrective territory doesn't mean we're going to reverse, right? Excessive can generally just go sideways for a bit, pull back in just a little while, and then go even more excessive, switching to bubble. So actually going excessive on higher time frames. So yeah, if you consider that dollar's gone too far and definitely has to go the opposite way, I sincerely doubt that question. Anyway, going one step further around sentiment. Sentiment is pulling down. Yesterday was 65 or 62. All right, so that's the thing. We're navigating into usual historical territories, not necessarily end of the world kind of area. I doubt that necessarily this is building a major lower high point on the weekly chart time frames, heading into massive bear market market for the next quarters and stuff like that. I still sincerely believe that we're going to go and build a triangle into these sentiments. We're going to oscillate, and just as right now, market feels pretty euphoric. Actually, as you can see on the fear and greed index, we're not necessarily that crazy fucking high. Just like I doubt we'll ever get below 30 or something like that. So people might be overreacting, social network mostly out there, but the reality is that fear and greed can actually, I think, sustain quite moderate levels in time. So we're going to watch out for this, as right now I think we've built a market top, but we're waiting for it to be confirmed. And the next question is whether or not we're going to build a bottom out of here. Lower high point, but higher low point as well. Kind of a consolidation on sentiment. God knows what the fuck is going to happen with stock indices because of this massive bubble on just 10 stocks. You know, of course, tomorrow is going to be a massive earnings release day because Facebook was supposed to release today. If my memory's right, I've seen they've been shifting this one day later, so they're going to release tomorrow, which is among few other massive tech sectors. I think like something like 30% of the Nasdaq is going to release earnings tomorrow evening. So Jesus motherfucking Christ, tomorrow is going to be hell of a day. So today could be boring at some point. Boring FOMC, not that much expectations, and of course earnings release, massive earnings release tomorrow. So yeah, we're going to account that in our trading scenario today. The fact that the big day might be tomorrow just as well as it is going to be the monthly candle close. So today might just be an intermediate type of day or an early trending day. Then we're going to assess that shortly later. Trading session yesterday, quite the opposite of what happened one day before. One day before was a totally boring beginning of session, and until we actually flushed down the European session, and then we went right into bullishness, straight line with the Nasdaq leading the thing. And today, quite the opposite. Yesterday's session has been boring on the early trading activity, totally boring, and then finally decided to shift to the downside. All right, pure and simply, that's what happened yesterday. Let's not over talk about this. There's no need. All right, future stock indices or here cash indices elsewhere in the world, not necessarily going bearish. Yesterday has been a session bullish for the DAX, bullish for Euro stocks, but we're sitting onto very dangerous support. So if we get rebounces, the big question is whether or not these will be sold afterwards to break these supports. My personal assumption is that yes, this is very likely going to happen, but the second question is when and how do we actually expose capital toward these perspectives. The Nikkei session, not very fancy. Like we said, pulling back to those supports, not very nice if those supports were to fall, which I think probable in this perspective. Look at how consolidative we've been for so long, so this might be a sign for something much more volatile down the road. And concerning the VIX is still totally boring, hasn't broken the resistance we've talked about. So until then, and until we actually get an answer, probably, I think by tomorrow we'll get an answer. That's a certainty. Eventually we could get a pre-signal today. Are we going to early break because of some disappointment comments from the FOMC or whatever? Or eventually we're just going to do it out of nowhere. It's totally possible once again. Don't try to time things like they have to happen. All right. Concerning 30 years bond, this is where the big game is going to happen today. This is what we're going to definitely have a look at by tomorrow, because this is where FOMC could be changing stuff. So we've noted yesterday that we were sitting on some supports and sending some early negative signals on yields. Yields increasing. All right, in here you've got the bonds, so that when the bond goes down, the yield goes up. It's pure and simply. So yesterday, basically, yields have gone pulling back, going down, and therefore bond prices have risen. So the thing is, I'm pretty much open question for for what's going to happen today, and therefore tomorrow is going to be totally interesting to have a look at this. See if we have early signals on big market participants, especially the longer part of the yield curve. Is it going against the Fed or still following the motive in which, all right, anyway, they're going to print money and it's going to be fine, or at some point they're printing too much money, so fuck the yields. In that perspective, I'm suspecting a move on the 30-year bonds, but this is still speculative trading out there. I'm not going to do anything unless I see prices moving accordingly. So yeah, overwatching bonds, but not necessarily early acting. I don't see speculative interest in here, not enough volatility to speculate. So I'll use that as a signal for trending behaviors in stock market eventually, but not necessarily going to trade those bonds myself. Okay? And finally, the dollar, but we already talked about it. Dollar is still going down, whether people like it or not. That's what the reality is. And so far, it has just kept on going. It's just that we're changing the mood. I mean, your dollar is not the leader right now. GBP, your dollar yesterday has been a significant mover. GPY keeps on falling, of course, so I'm pretty happy with that. I mean, you know, I'm exposed to those trades, so that's a fine trade for me. Anyway, let's switch to TradingView, another transition out there. That's the one I need, actually. All right. And of course, I forgot to go full screen. No big deal. So here we are. That's our big boy S&P. We're going to cover these time frames every day. 1 hour chart to give us a global sentiment and boundaries for trading in the intraday session. And we'll get down to 15 minutes to clarify this. Eventually, a little once in a while, 3 minutes. But also remember that what you see out there, these things, the trend channels, all right, they're the lower time frame context. So when I tell you trade the trend channel, that means trade the lower time frame. Okay, so we're not going to do this on the H1 time frame, but when I tell you, all right, interesting stuff going on with the trend channel in 15 minutes, that means go trade 3 minutes. Okay, it's just saving me the time to switch time frames. All right, so our global context in here, 1 hour chart time frame, still remains quite hard to figure out. I would eventually note this structure. That would be a potential head and shoulder. I mean, this is just, I'm seeing the stuff. It's still hard to say, and of course requires a breakdown into this area. That's of course the breakdown I'm waiting for, because so far all we get is a totally boring market consolidative structure. We've managed to break the context channel in here, suggesting a potential reversal might be on the verge to happen. We did have some signals in here. We did have potential market reversal structures out there. So reverse, yes, it's fine. It can happen. It's just that it's also not necessarily granted at that point, because we actually at least need to print some trends, and therefore we need to see some trending behavior, which is not necessarily what we're seeing right now. Yesterday, or it was 2 days ago, yeah, no, it was yesterday during the overnight session. So we've built a market up in here, failing to reach the context boundary, which means we've traded the trend channel, which could be a good sign. That means we're trading the resistant trend channel in here, but we need to confirm it by going down to the context channel back there. That would signal the fact that the market is early showing signs of trends on this H1 time frame. Until then, that has to be range. Other big technical elements, look at moving averages. Moving averages are going up, so even if you do have breakdowns, they cannot be anything more than just ranging. So still look for potential supports on lower prices. I suspect we're going to go below those trend lines, those moving averages, but it's going to require deteriorating prices first. So right now the sentiment is mixed, both bullish and bearish. That's exactly what we've seen in the context analysis. The major catalysts are mostly tomorrow, even though FOMC could be an early party player in here, like call that foreplay eventually. So that's it. We've got nothing to deal with in the H1 time frame. This is getting over bullish in here. This is the area in which you really don't want to be selling into the intraday perspective, most likely catching up on your gains or eventually trying some counter trend trades if you're suitable enough to do this. Then we switch 15-minute time frame charts to make this analysis a little bit more precise. And this is where we're going to make our forecast, and in here we can definitely see something interesting. All right, it definitely looks a lot more bearish into this time frame. This is the one I'm favoring right now. We can definitely see in here that some trending activity is going on into the lower time frame. Okay, have a look at the trend channel. All right, this is definitely a 3-minute bearish trend that has been going on, has its bullish range consolidation following through. Generally, this type of market behavior is followed by another set of trending waves. So that's the reason why yesterday's plan has been, if whether we get to see some signals on the trend channel, all right, which is the 3-minute context, all right, if you've got signals on the 3-minute context and if they signal trending signals on the 15 minutes, then we've got a pullback opportunity, totally viable for selling. That has been a fairly good plan yesterday. We've managed to make a lower low point, which is totally confirming. Okay, we've gone context channel, trend channel, back to context, which means we could be on the verge for accumulation. That is totally great, as long as we don't retrace back to the context. So my big questions for today is I have two options. First option is the most bearish one, is we fail once again this morning. We do have another set of trending signals, so it's really getting deteriorated out there. If we fail, okay, with this massive hidden bearish divergence on top of it, I mean, we're clearly trying to make new highs on momentum and see how fucking low we are. Okay. Despite that, so if these signals were to validate, which means pushing us back to this support, I think a breakdown is going to occur because we've accumulated, which means we're totally granted for some trending behavior. That would just be a follow-up trade on the previous trend we've seen a few days ago. So it would be totally normal. It would obviously target the areas we've highlighted, which is the supports on the higher time frame, H1 or H4 supportive areas. That's not going to be a reverse huge bearish trend, at least not necessarily right now. But if we go down this support, I think a breakdown opportunity is down the corner. Remember that in order to break down, we need to break and close below both the trend channel and the context channel. So the longer it takes, the harder it will be for us to break, okay? So if today is a breakdown, I suspect price will go there and accelerate. All right? So that is going to be my first trading opportunity for the day. I personally will take this trade, which means you know that I favor selling into stock markets right now. So the thing is, I'm still not net short exposed. I still have bullish entries on the portfolio, and I'm basically covering right up to the bullish exposition I have, trying to compensate for potential deteriorations in the stock markets. But further down the road, I suspect going net short again, but I need those bearish reversals to actually be truly validated, which so far we're failing to do. We're getting into this territory, but it's still fairly low. Volatility sustained to very low level. We need to see some action. All right, so whether or not it's going to show up within the next few days, still a big question mark. So yeah, I'm waiting for volatility. I'm getting prepared into intraday timeframes for breakout reinforcements and stuff like that, but I need to see this happening. I'm not going to anticipate the trade today. The accumulation was yesterday, so today is just whether or not we will confirm this trade, big yes or big no. If we fail, and if we retrace back to this trend line and break it up, which means joining back the resistant context, that simply means the market is not willing to break down. And if the market doesn't break, which means doesn't trend, we're in a range. It's pure and simply. And we can have fairly more complex ranging structure. We've made two sets of waves to the upside. We can make two to the downside. And if we fail to trend, then we're going to go for two waves to the upside and simply get to retrace further down the road. We've made 61% retracement out there, which totally favor trending behaviors later on. We could go 76. All right, that's totally possible as well. So if you're getting crazy bearish right now, just be aware that selling a support by anticipation is something that you can only do if you have the available signals for it. Okay, so yesterday we're still having trending signals, but that's the second ones in a row. Yesterday's ones were far less riskier to trade. This one earlier today definitely has to work out, otherwise this is an absolute loss down the road. All right, because if you're selling in here and if you get proven wrong, I doubt you'll get the pullback to get out. You'll eventually get it, but that's not a certainty. You know how Wall Street is when they're taking down the bears, so I suspect the market will eventually do something like that, and you're not going to get your price, which means you have to take your stop loss if you're wrong today. If you take trending behaviors into a range, that's generally going to end up with a stop loss, but that's also totally normal. All right, we don't know the future, and if you're taking risks and if you're getting totally wrong, then stop loss is absolutely necessary. You're not going to be right every time. All right, that being said, I think we've got more than enough information for our conclusion. All right, sorry, missed transition out there. There's something I'm going to need to work on. Apparently the shortcuts doesn't necessarily work, but I'm not switched to OBS. But here we are. Let's make a conclusion. So today could be a breakdown opportunity. But that's not necessarily granted at that point. It's just that the supportive area are very fragile at that point. If we go out there, very likely breakdowns are going to happen. I'm totally looking into this, but also the fact that this breakdown could already and should already be done by now. So I'm I'm actually asking myself this question, if whether or not the market is going to give us another trapping opportunity, like opening the doors for bears to walk into, they're selling the support, and bam, market makers fucking them up, retracing to some more resistance levels. So trade this real carefully. Be aware that if you take the riskier trades to try trend following earlier this morning, this is a mandatory stop loss going along with it, because if you get proven wrong, there is probably not going to be pullback. The trades, or those who've been taking the trades yesterday, you might be at break even right now and just waiting for this thing to either happen or not happen. In that perspective, you've got the luxury of simply not risking any money in here. It's either you're going to be right and you're going to take some cash, either you're going to be wrong and you're going to lose nothing. That's exactly the best case scenario in which I hope you are into. That's the reason why we get prepared for trading and stuff like that. Okay, we never know what the fuck is going to happen. We're just trying to limit the risk we take when we get to eventually be proven wrong. And that's how trading actually works. That being said, today is a much longer perspective study. Normally we're supposed to stick with 15 minutes. So I'm going to stop in here and see you guys tomorrow.